We are live. Family, Elevate 4.0 people, welcome. We are at day 2. We kicked it off yesterday in fine style, and we're happy that you're joining us here again today. If you're just joining us for the first time, welcome. You missed a fabulous session yesterday, but as I like to say, we have recorded this. You know, we like to record all our good stuff, right? If you check out JMMB Group Jamaica's YouTube channel, it is chock full of awesome content. And it's because of events like this, mostly Goal Getter Live, which we're going to get back to that one of these coming days. Stay tuned. But we are recording all of our Elevate 4.0 sessions, so have no fear. Whatever you miss, you can catch it when the recordings are ready in the coming weeks. More about that in your email. So welcome. I am Carrie Ann Stimpson, Chief Marketing Officer, JMMB Group, and we are happy to have you here for another awesome session. I'm sure everybody did their Saturday business today and they're ready. We know the watch parties are happening. We see the pictures, we see the posts. Keep the vibes coming. We're going to have a great session. Couple sessions tonight. Yes. So let me start off because I got some homework items, and as I say, I have to keep the little work. Don't want to send out the resume when it's all over. First of all, we want to thank our sponsors. You know, that's how we pay bills, right? We cannot do Elevate 4.0 without our valuable sponsors. And of course, they are Express Fitness. Thank you very much, Express Fitness. Domino's Pizza, yum. I see we gave out some free pizza already. You're going to find out about how you can get a chance to win more prizes and surprises in a minute. We also have to thank Water and Cran Water, other sponsors as well. We have to big up Live Simple, which they offer gorgeous, lovely. They smell great too. Natural products that are good for you and for the earth. And then, of course, our friends over at Brescia, who does a lot of awesome locally made stuff like bags and masks. You got to check them out. Roast by Brescia Instagram. They are fantastic. So thank you so much to all of our sponsors. We really appreciate you, and thanks again. Now, we spoke about prizes and surprises. So here's how we're going to do it, guys, because we started to give out prizes already. Now, we have some winners from yesterday, right? And we only have the winners by the names of their handles, whether it's IG or whatever. And let I tell you, some of them handles, they're very creative. And I say, you know, if I try to pronounce some of them or make them into words, I'll probably cause a bad word on the recording. So here what? You're going to look on the ticker down the bottom, and you'll see who are our winners. If you see your name on the ticker, you are a winner. Now, if you want to get a chance to win today, here's how we're going to do it. Same process. So on Twitter, my Twitter people, I know you're probably tuned in with the heaviness right now because of some of the guests that we have here. But the Twitter people, here's what you're going to do. Same thing like yesterday. Watch this session. Tweet all of the nuggets that you're getting, because we're going to be getting some fabulous nuggets again, because you know who's on the lineup, you know, so the nuggets going to be hot and dropping. Tweet all the nuggets that you get. And of course, the people who have the tweets that get the most amount of retweets, you get a chance to win one of our prizes today. So yes, please be tweeting. And of course, when you tweet though, here is the homework. You got to tag JMMB Group JA. And then you also got to include in the tweet the hashtag JMMB, hashtag JMMB Elevate, and hashtag JMMB Goal Getter. So, you know, we give you a little homework, you know, not just give what the prizes them just, all right? But we have to share the nuggets with the world, and we invite you again to send out your tweets with the nuggets, and the persons who have the most amount of retweets, you get a chance to win. Just please tag JMMB Group Jamaica. Use the hashtag JMMB, hashtag JMMB Elevate, and hashtag JMMB Goal Getter. For our people on Instagram and Facebook, don't worry, we haven't forgotten about you. If you want to know what you can do or what you should do on IG and Facebook to win a prize, please just head on over to JMMB Group JMMB Group Jamaica's IG and Facebook pages. We post the instructions right there. We tell you what to do your thing, and you get a chance to enter and win a prize. Okay, so we're giving it away hot, and again, thanks to all of our sponsors. And of course, JMMB has been giving away a few prizes as well of some gift certificates, so you never know. All right, so that's surprises and surprises. Finally, another housekeeping item, guys, is that, of course, we do Elevate for you, right? And one of the things we love to do is we love to get your feedback. We want to know what we did right, what worked well, what didn't work so well. We want to get your feedback. So we will be sending out a survey at the end of Elevate Day 3 tomorrow. Look in your email, whatever email you use to sign up and register. We're going to be sending out a survey. And yes, guys, please complete the survey, beg you. I think there's probably a prize, a chance to win a prize too if you complete a survey. You never know. Because, yeah, we got lots of giveaways and we have to get rid of them, right? But yes, please look out for that survey and please give us your honest feedback so that we can use that to know how we can come even bigger and better for year 5, God's willing. So those are all the housekeeping items, guys. And again, Elevate 4.0, we are here to break it all the way down, keep it all the way real. The people on the panel know what I'm talking about because we just like to do it like that at JMMB. And we're very, very excited about this session that we're about to jump right into. Okay, first of all, I have to put in that ever important disclaimer, right? Whatever we're sharing on Elevate 4.0 should not be construed as financial advice for you, right? Because we have a very broad audience, everybody who's watching, some people high risk, some people love tech risk, some people not so much, some people have a long-term horizon, not so much. We really can't give a customized recommendation to suit your particular situation. So this is really just for educational and informational purposes only. And of course, we invite you to make sure that you have the conversation with a licensed professional if it is you would like to get further information about what you should be doing about your own personal portfolio. So just putting it out there, folks. All right? Just put it out there. Very, very important. But this session is going to be awesome because we're going to be getting into the whole matter of stocks. And JMMB, we like to pride ourselves as being the #1, what I call retail stockbroker in Jamaica. No other broker does the amount of trades that we do, certainly for the last few years, right, Greg? Everybody know Moneyline, and everybody love Moneyline, especially when IPO come around, as I like to say. If your IPO not on Moneyline, come again. So we are very, very happy to have this discussion. And we have some awesome, awesome panelists who are right here, ready to go. This session, we're going to be talking about the whole matter of stocks and how to invest in stocks and what to look out for, things to consider. Again, a very general, informational, educational discussion. It's going to be moderated by the famous Randy Rowe, right? Randy is my person who will talk more on WhatsApp than anything else. But as you know, Randy's passionate and very, very knowledgeable in this area. So he'll be moderating the flow of the discussion. There he is. Yeah, man, everybody looking good to the man. Why? Pretty. Pull up pants. We look good too? All right. Then now, we have Greg Lindo. Now, Greg is team member on the team member side of the JMMB family because we're all family, but Greg is a senior executive assistant general manager, a big title man. Greg know him thing, huh? Just so you know what I'm saying, right? He does the work. So Greg knows his stuff too. Greg is one of the team leaders in our trading unit. And of course, Greg knows all things stocks. If you're on Twitter, you know him. And also he appears on Kalila's show quite often, I think up until this weekend here. So welcome, Greg. Thanks so much for joining us. We're working poor Greg hard. Sometimes you have to tell me, no man, I'm tired. But we appreciate you, Greg. And of course, another popular gentleman. If you are on Twitter, you know him. If you read Observer, you know him. If you go to UE, you know him. I know he's popular. I say he's popular with the ladies because he's such a gentleman. Lord, man, him sweet man, nice fellow. Mother raise you well. David Rose. David, they call him young investor. I like to call him an investment research analyst, business writer, everything, student, everything. But David really is passionate about this topic and also is passionate about education educating Jamaicans in how to invest, especially when it comes to all matters stock and how to read financial statements and so on. So I can tell you, the panel is fire this evening. And so we know that you're going to be in to get some awesome nuggets. So keep that tweeting going. Check us out on social media, IG and Facebook. And without further ado, I'm going to crawl out of this frame and hand over to Mr. Randy Rowe and his fellow panelists. Over to you, Randy.
Thank you very, very much, Kerry. And good evening, everybody. Welcome, of course, to day 2 of Elevate and the session that I know a lot of people are excited about, the stock session. I'm Randy Rowe, as Kerry introduced me so wonderfully earlier. I call myself a retail investor advocate, which is a fancy way of saying that I buy stocks like a regular person, and I help regular people to do the same thing too. So this evening, I want to go through with the wonderful panel that we have just some points that I know that we will all have along our journey, especially at the first start of our journey, right? It's an opportunity for us to get those questions out. So I want you people at home, everybody at home, watching on your phone, your tablets or whatever, get the questions in, put them in. If you're on social media, throw in your questions. There's gonna be times when we pause and we try and take the questions from you. And of course, we're going to go through some of the basic starter questions, right? So we're talking this evening about stocks, the thing that is extremely hot these days. Everybody hear about it. If it's not an IPO, it's who make a whole heap of money in the stock market. Stocks right now are one of the hottest investments. And I will tell you that stocks, in my view, are one of the best investments, right? They have worked for hundreds of years, and I suspect they'll work for hundreds of years to come. Everybody should get into it in some way, shape, or form. And what we want to do tonight is to really help bring you through it. So my goal is to pick apart those little early beginner things, get the ideas that you have out there, strengthen it with myself and the team, of course, and we move through the topic. So get the questions out, get anything you want to know out. You have a nice panel of experts here to help you. So trust me, let's go. So I feel as if we should start, I believe, with Greg. Greg, we should start with you.
Sure.
Of course, let's start off with the people who are brand new. Somebody's brand new to the stock market. What exactly you want them to know in terms of just the basics? What exactly is a stock?
Oh, good question, Randy. So if you look at the stock market now, you pay attention to conversations. I think a stock would be more defined as bricks, right? You're stacking your bricks and making money. That's how you make money is in stocks. But at the basic level, stock it represents a unit of ownership in a company. It's way more than just a security that you trade and make money. It gives you economic rights to dividends, to vote on the direction of a company. It represents, it's a legal right for you to have the economic benefits that accrue to a company. It reflects in the value of your stock. So that's essentially what a stock is. It's not a magical fairy tale thing that just makes money. It is actually a legal right for you. It represents your ownership proportionally in a company, and you derive economic benefits through dividends and market appreciation.
Mm. So, put simply, when I own one JMMB stock, I am an owner of JMMB.
Yes, yes. Not an owner to kick off key door or walk in, but you are an owner and you have rights that are attached to that stock. You can vote at the AGM, your voice can be heard, and of course any distribution of profits you are entitled to your proportionate share of ownership.
All right, so of course people like the profits and we'll touch on that, but we mentioned stocks. I think that brings us then to the natural next point. What is the stock market? It's a nice easy one, you can follow up with it.
Yeah, so the stock market is really the venue where shares or units of ownership stock are sold and bought. You have buyers and sellers just like any market, and the price of the stock is determined by what is the supply versus demand. That's purely what it is. Mm-hmm. Of course, the supply and demand dynamics will be driven by what is happening in the market, how the company is performing, and other things that may be happening in the wider environment. Where the stock market is just the venue where the shares are bought and sold.
All right, so it's like it's a real market.
Yeah, not far from you go into a market to buy goods. When the price of tomatoes go up because there's scarcity, similar for stocks.
All right. Also, of course, we know what the stocks are. We know what the stock market is. So the question that everybody wants to know, the beginners, how do you get into the market?
First thing is first, get an account, right? You can't trade stocks without a brokerage account. At JMMB, we have a EMA, it's called an equity money market account. It is an account where you would deposit your funds to make trades, access money line, and it is your first step in accessing the market. Although, I would say you have to educate yourself first, but without that account, you can't trade.
That is true. I think of it like a ticket to the market. You're right in that education is the thing that you
Yes.
definitely have to start with. And once you have the education and you have the access to the market, of course, the question is how do you get into it? What is your way of doing whatever it is you want to do in the market? Of course, that's a great point, I think, for David to come in on. So, David, the first question for you is what's your personal strategy around getting into the market?
So the first thing that you should understand, is determine what is your timeline and what are your desired goals. So when I started back in 2016, I opened 2 accounts. Initially, strategic account was going to be the holding account or the quote-unquote long-term account, and Jamie was going to be the trading account. I kind of flipped the script now, but when you start investing, you have to know what your goal is. So is the year to try to earn more money, which is everybody's obvious aim, but are you to earn more money in a year? Is it for the future, like for retirement or a pension? So if I'm going to start investing as a beginner, the first thing I would do, is probably talk to the licensed financial advisor or, speak to someone else who's already invested and understand, what has been their journey in a perspective.
All right, I get you. So, you say like if you're just starting out, you might not know what it is that you specifically want to do or have to do. So you lean on somebody who has more experience than you, an advisor. And of course, JMB has great advisors that they include once you start doing business with them. And I'm biased because I did start with JMMB, my very first account with JMB, and I still have it. A nice MR account, actually.
Same.
All right, so we're good enough. But if you bring it a little bit more personal, and of course, as Kerry pointed out, people, this is not advice, but for you in your space, as somebody who is, I think, fresh out of university, I don't know your money, but I don't know if you're a multimillionaire yet. What is your personal strategy and style of how you approach the market?
All right. So in recent times, and my original approach is, I look and say, all right, is it that? So look at the companies in the market, and I'm like, all right, are we looking at the financial companies, the manufacturing companies, or is it the case where I'm talking about another company of another nature? So, for example, my first pick, and I'm using this example to make things very clear, was Surgical Jamaica. At the time, I bought the company just because they had just acquired Surgical Bank 2 years prior, and at the time bought about $21 per share, which equated to 9,000 JMD because I got 450 units, right? By 2019, when I decided to sell at that point, I sold around $66. And it's basically call it 200% plus return.
All right, but I don't want us to lose the people. So, two things. I'll try and just chop down some of those points that you made. And two, it's not a secret.
No,
Speak up, man. Make people know, man.
No, I'm making a secret. I just give you a basic a simplification in the sense that what company are you looking at? Is it that you're a person who is, let's just look at the economy, for example, and you see the economy is going up. Or and you say, public consumption is going to get better, they're probably getting more chicken being sold, they're probably getting more goods being sold to the hotels. So, look around your surroundings and say, all right, what do I see and which companies are the services so I can derive that gain from it in perspective.
Okay, so your strategy is aligned around looking at the real life things you can see and how you can benefit from the market there.
Yeah, because although the economy and the stock market might not move one-in-one, meaning directly relationship, you can still look at the real economy and say, all right, if this is going on, is there potential for me to make money from it in what timeline as well? So it also comes down to that perspective as well.
I get it. And of course, along with that comes the numbers. Some people might be afraid of the numbers, you don't have to be. But you do have the experts who do go through it. And Greg, I know you have a bit of experience in that where you can do a bit of both. You can do what David said in terms of seeing what's in front of you. We're not going to stop buying chicken. So maybe I think about the biggest chicken company that's listed, right?
Yes.
From a more I'd like to think, sorry, but an older perspective.
That's perfectly fine.
I think you're a father also, right?
Yes, yes,
So,
yes.
so maybe what would your strategy be approaching it from that angle?
Okay, so my strategy, some of the things that David said, like looking at the macro outlook 1st. What is happening in the economy, right? Based on that, you can get an idea as to which sector is performing well. We know construction is a sector that has been outperforming a lot of other sectors. So you automatically think of things like cement. You think about manufacturing and distribution. Grace Kennedy is on a tear mainly because of their revenues are really coming from food, and they have a massive money services division, and because remittances are a big driver of the economy. So things like that, you look at the macro and it guides you in terms of, all right, these are sectors I really need to be paying attention to. Even like tourism, right? Tourism would have taken a massive hit in COVID, right? And you would have seen some of the stock prices being depressed. Well, guess what happened? COVID is now kind of, we want to hope it's on the back end, but tourism is recovering, right?
Correct.
And then you start stocks like CPJ and Dolphin Cove just rolling through. So if you are a person that can see the opportunity ahead of itself, right, and take decisions prior, then you find yourself kind of in a better gain position, right? The thing about being successful in stock market investing is you're always trying to predict the next move in the economy, the next move in the country, and the ability and capacity to take the risk of the decision. Sometimes if you wait, by the time the information comes, guess what? Everybody has it, it's out, and then the stock price is
Already
gone,
moved.
right? So it's about staying informed, keeping your ears to the ground, reading. It takes a lot of reading, investment in reading to understand and know what is happening, to best decipher what is going to happen. Because, stock prices really should be a reflection of the future. But I find in Jamaica sometimes it's more of a reflection of the past, right? So those are some of the things that I tend to want to look for. First, what's happening in the macro, what's happening on the sector, and then I look at which companies are best positioned or provide the best value for me to make successful trades.
All right, and I see you saying yes, David. I don't know.
No, I agree with Greg entirely because the reality is some companies just have a dominant position in particular spaces, like remittances, for example, or in this case, chicken production and distribution. So they're actually going to be inclined to benefit more from, let's say, a recovering economy or expanding remittance income into the country.
I like that. And I always say that that point that both of you raised earlier, Greg called it the macro point, and David is saying, looking around him, you eat food, check to see who sell the food that you eat, right? If the listed
Right.
company, chances are they're gonna continue to make money. If things are costing more, gas going up, see if there's a gas company. And sometimes you hear things that are more popular, maybe a bit bubbly. I know recently we had the Spur-Tree IPO, and that was a huge one. Some people may not have known Spur-Tree, the company, but we know Spices, and then when you find out about it, Greg mentioned it's a lot of reading. The harder you want to go in the market is the more reading it does require, but you are perfectly capable of doing the general reading that you do know. If you watch news, you already know enough to invest, I always say, and the gains can be there for you for a long any time period.
That's true.
Now, I want to stick along the educational point because I think a common question that people who are starting out have is, how do I know what to read? What's something that I can read in order to learn more generally, either about the market or just general strategy?
Okay, so we're in a time now where I think information is more accessible. You're starting with the news. I mean, reading the news, that's probably your first basic point of understanding what companies are doing. You have books that you can read that I find them to be more on the theoretical side, and you have to be careful of that because not all markets operate purely based on the theory. You have social media, which, yes, you have to be careful how you curate the information that comes to you, but you have persons that provide information. Randy is a person that does it, David is a person that do it, right? You guys invest time in providing the information. When I started investing, we never had any of that. I read a book on Warren Buffett, I read some textbooks. I went into the market with all this theoretical knowledge, and guess what? The market crashed, right? So, now, there's a little bit more in terms of how you can get information, collate it, and you have it in a useful manner. But it's not going to work unless you inform yourself. And that is you have to make that investment, right? To understand what it is you're looking for, and then what to accept in terms of what is pertinent and what is not pertinent in terms of the investment decisions that you're going to make.
I get you. And I mean, again, simpler terms, what Greg is putting forward is that it's not necessarily that any company is bad completely or good completely. It's the right company for you, for whatever you're looking for. So that then brings us to a good question, I think that maybe David, you can touch is, how do you determine if the company that I'm looking at is good for you, or what is the right sort of thing for you?
So the first thing I would do, is look at just the company and see if I understand it. Because sometimes, so like even yesterday, somebody messaged me and saw a release on the JC, right? We all saw it. A company was buying another company, right? And the person said, it's a GK company. I'm like, Regine, hold up. One more Google search, sir, it's a GK Money Services location. There's a difference. So that's the first thing you need to do. Just understand the basic. Just do it. Saying try get a PhD or try get a business degree and say I'm a master. No, just understand what they do. So, for example, if the company distributes gas, they're a gas seller. If the company, for example, manufactures a milk powder, it's a consumer product or consumer discretionary product. Just keep it very simple and just break it down. The next thing is understanding, is this company, for example, what is the free float in one perspective? And free float meaning number of shares available outside of, you say, for example, the top 10 owners. And, also understanding, what is the potential outlook for this company? So you have some companies that are tied directly to the economy, meaning if the economy goes up, you see the results move a lot faster than the economy's growth. And in other case, the economy is going down, they potentially go down at the same pace. So you have some companies, no matter if the economy is going up or down, they're making money. What you have to understand is what space they operate in. And as someone said recently, a company that is in manufacturing, their capacity is constrained by, really and truly the ability so much they can produce and the demand. A company that is in the intellectual space, like producing news or advertisements or content, they're limited by intellectual capacity, which is unlimited. So when it comes down to choosing a company that suits you, as I said, the first thing is the goals, the timeline, also understanding the company. And really just take a second and Googling something before you make an aspirational comment or just say, I'm going to buy a company like that. Because I've seen too many cases where persons say, I see a piece of news, I'm going to buy it. And I'm like, did you not see that the company is getting sued, or is that see that the company is being sold for X? And that's just, your first piece of due diligence stuff and just actually take a second and read to find like the entire piece of disclosure or news before you just make a decision like that.
Wow. So I like what you said, David, and remember we want the people to hear, so push the volume. Better we load that.
Of course.
But
Sure.
the thing I want to get there is because it can be daunting to some people, thinking that, wow, boy, I just want to make a little bit of money, or I just want to put down some money for my kids. So how much do you, and it's really to both of you, how much do you recommend stocks to somebody who is starting out on investment? Because stocks aren't the only investment out there.
Well, I think how much you put in stocks is really based on your risk profile, right? Your age as well. We tend to want to think when you're investing in stocks, you should have a medium to long-term time horizon. Doesn't mean that you can't do very well in the short term either, but it requires you to have a certain amount of time investment to achieve that result of short-term trading, right? So it really depends on the individual. If you're a person that you find yourself probably on the conservative side, you're not really able to give up the time necessary to get the information to make the best decisions for trades, then you may be better off in a fund. You may be better off in a fund that has exposure to stocks that you can, benefit over the long term, because you just don't have the time to trade. There are persons I know that bought stocks, like they bought DNG. They still have DNG, right? They still have it because guess what? The offer came, went right over their heads. Didn't even have the time to say, let me take advantage of the offer. Had that person been maybe in a fund at D&G, they would have accrued more of a benefit. So I mean, the minimum to start, I think, is $10,000. And I would suggest to any young person that's just starting to work, starting to set down some money, think of stock more as a priority. You know, as Randy said, I also agree with him. It's one of it is probably the best vehicle at creating wealth long term. You're not going to create that out of a savings account
Can I add on
or a partner.
Can I run that, Randy? So, I'd also say it comes down to your cash flow and your priorities or expenses, because I know someone who said it, messaged her recently and said, she has X, she wants to get to X targets in the future. I was like, oh, one, understand your cash flow, because the person would be like, oh, I'm missing stock. Well, I'm like, first question, but I'm going to open that account in the first question, is it that you're going to have the cash to actually invest, and are you have the time and to wait? Because, as I always say, it's only invest where you're willing to lose. Because you won't lose all your money, but at the same time, you can lose a lot of money. And if your cash flow isn't necessarily stable, if it's going to be erratic or so on, you need to at least plan out how you're going to invest and how much you're going to invest at any given time frame. So you're going to invest like a big amount every 3 months, every month. Some persons do dollar cost averaging, which is just buying a stock at a set timeline. Doesn't matter the price, you just continue to buy continuously. And I spoke to someone recent. Well, I given these examples before online, where, for example, I could mention someone conservative. There are companies that are overlooked or securities overlooked in the JSE, where they're trading below their quote unquote par value, meaning residence day value, and their redemption is distant probably 2 years or even 1 year below. So I remember when COVID just hit, and there's a preference share that was being sold for $1.50. The par value is $2. So if you bought 100,000 units. They have 150 grand invested, right? Within a year, they've gotten $200,000 returned to your pocket, and plus some dividends. So there are options on the market, not just buying ordinary shares. They have preference shares and other instruments, but the reality is explore and understand what your risk tolerance is and your time. Because I said, for you to collect 50 grand in a year with little to no risk, quote unquote, no risk, then that's a pretty good return for some persons.
All right, and again, I don't want to lose people, so I'm going to touch on that because you mentioned a different type of shares there, but I don't want people also think that there isn't anything for them. But, so we still have the poll questions coming. We'll talk a little bit about those 2 different types of shares that you mentioned, and then we'll allow the people who are watching us online to participate in a poll. So you said preference shares, which are different from ordinary shares. So I don't know, well, actually this one I'll put to Greg. What's the difference between those 2?
Okay, so ordinary share, in most cases, right, you have voting rights, you have rights to ordinary dividends, right? That's the basic class of shares. Ordinary shares are common shares. Preference shares now is a hybrid because it sits a little bit higher in the capital structure, meaning that let's just say a company is sold or liquidated. Usually, when a company is liquidated, the staff, whatever staff liabilities are paid first, debt, preference shares and ordinary shares are the last the last class of shares to be paid out. Preferential shares sit above ordinary shares. Usually they have no voting rights, and it's characterized by a fixed or variable dividend. So what you're getting in a preference share normally is you're getting guaranteed or more certain dividend flows, rather than ordinary shares where you may get dividends, not necessarily a guarantee. Some companies may have dividend policies, but really it's up to the board to declare those dividends. Preference shares, now there's a little bit more certainty, but those shares, of course, don't carry any voting rights.
Correct. So for the people who are very serious about the dividends, preference shares are great because even if the company isn't doing anything else, chances are they have to pay out those preference shares. And they can't go, well, we let the preference shares sit for a little while this year. No, it has to happen. While ordinary shares, some companies go years and not paying it, right?
Correct.
No, I don't know if you want to do the poll or if you want to maybe touch on, well, JMMB themselves has some wonderful preference shares.
We have a lot of preference shares. It is a very useful tool for us to raise capital. And it serves a dual function because we have many clients and investors that want fixed income or they want determinable cash flows, and preference shares allow them to get that. So, we use preference shares in that regard, and it funds our expansion. It gives us the capital to fund our expansion into other businesses. And other companies use it just as much. Epley is another company that has a lot of preference shares because they basically use it to fund their acquisitions and their loans.
Okay.
Yeah.
So we have one question coming from the audience. And remember, guys, you can send your questions in. It's not just the questions I have for the guys. Your questions will be asked also. So one question that we have coming in is it possible to buy insurance or on stocks listed on the JSE?
Insurance. If you're speaking of like insurance like JDIC on your deposit, no, your investment in stocks is not insured. So if you choose stocks wrong, you're liable to lose. You can lose everything, right? If the company worst case goes defunct, but you can buy stocks in insurance companies. So I'm not sure exactly.
Let me add to that discussion. I think what the person was coming from, is from the overseas perspective, whereby, let us say, so for those wondering what options are, it's just a financial contract. And,
Options.
so the person said insurance has options. And, for those who are wondering, an option, is a contract that gives you the right and an obligation to either buy or sell stocks to a particular degree.
Okay.
So,
So I think that's actually
so like put options and call options.
yeah, or shorting.
But we don't have to the market as yet. Well, we to the market as
The
yet.
market is not at the point where we have options that you can purchase, but it is something that is being looked at. It is something that the brokers and the stock exchange has had conversations on. And hopefully, I do hope it happens at some point, because bringing derivatives like options has the potential to deepen the market and provide other means for persons to, either hedge their bets or make even more funds.
So let me give an example to the audience who is probably watching. So there's a company called MJE, maybe Jamaican Equities Limited. They own some Supreme Ventures Limited shares, right? Ordinary shares. Back in 2019, I believe, they had sold a call option to somebody to sell some SPL shares at $17 per share. So within that 2-year timeline, the person who bought the call option had the right and an obligation to purchase SPL shares. I think it was 1 million shares at $17. So if SPL was, for example, at $34, they could have purchased SPL at $17 instead of paying $34 on the market. But in this case, COVID came, and the price of SPL was actually below $17. So the option expired worthless, meaning that they didn't exercise it. And in this case, MJE kept the premium. Because the thing with the options, somebody has to pay a fee to actually get that benefit or a contract, for that kind of certainty of being able to buy or sell a stock in the future.
So MJE kept the difference, really.
Yeah, they kept the premium. And that's just the benefit of options in that regard. But the thing is, as Greg mentioned earlier, the shorting options and the different things that are seen in the international markets, the stock exchange here in Jamaica is actually looking at and this one is correct in the future. But in the meantime, just take your time and just look at those different options. For example, let us say one sector of the economy is going to go down. They said another sector goes up. That's another way you can look at hedging your risk.
Okay, so maybe if it was back like a few months ago or last year when the pandemic was really hitting us
So like when
hard.
tourism went down and you have construction booming, then like that kind of example. So you can hedge in that kind of risk. And I saw another question coming in about asking how you buy preference shares. So preference shares, the ones I was speaking about earlier, are actually listed on the Jamaica Stock Exchange. So once there's someone actually selling those shares, meaning someone actually willing to sell the shares, you can purchase them. However, one thing I'd recommend you do, and this is advice, but it's a general caution, is to please go back and look at the prospectus of the preference shares and know what the par value is. Why do I say that? So, the example I gave earlier, the par value in that case of that preference share was $2. Before $1.50, when the year comes, you get paid back $2 per share, right? If the preference share has a par value of $2 and you are buying at $2.50, when redemption time comes back, you're going to basically lose that 50 cents of what you bought initially.
Okay, so that again underscores the need to really understand what you're putting your money into. I'd mentioned that we had a poll for you guys to win, and I don't want us to forget it. So the poll question, which I think for the people on Zoom will get, it's what are the different ways to invest in the stock market? And your options should be in front of you. Is it that you open a savings account, a stock brokerage account, blah, blah, blah. I don't want to bias it, but I know, I'll give you a hint. I think Greg mentioned it earlier. And, well, of course, while people put their answers in, we can talk maybe more about some of the other less technical parts of the market, things that people enjoy. So they do get dividends also.
Yeah.
And some companies, well, there's no obligation to pay a dividend. Some companies do pay dividends religiously. Carreras is one that has paid one.
Right.
Every 3 months they pay a dividend.
Right.
Yeah, in fact, in my research last year in 2021, Carreras was the top dividend paying company on the market. And there are quite a few dividends. I looked at the top 15 and Carreras was the top one when I was looking through it. And what we have now with the junior market also, we have some companies coming where, even though they're usually smaller companies that are growing, some of them have started to also pay dividends pretty early.
Access Financial Services Limited actually pays quarterly.
Yes.
So that's another company you can speak to.
Yeah, and Access Financial is a great example of the junior market. It's the first company that was listed on the junior market.
October 30, 2009, or it's October 31.
You have it, you have it
Yeah.
tattooed into your brain.
No, I have a spreadsheet. I have a spreadsheet at home, so that is why I remember that date.
Yeah, man, and that's a good company to show. Of course, the latest one is one that we mentioned earlier, which is
Spur Tree Spices Jamaica Limited.
Right.
So, Greg, going back to you, let's say that somebody has decided that this for them, and I mentioned looking for education before, you know, and that's one of the questions that somebody had out there. What kind of books would you recommend for somebody who is trying to get into it as a beginner?
Why there are so many books to read. I mean,
Specifically as a beginner.
as a I don't think I've read any really say beginner books. The first book I read was the Warren Buffett Way, which of course it promotes a philosophy that we know, buy, hold, and prosper, right? There are other books, I think, Who Moved My Cheese, Robert Kiyosaki, Rich Dad Poor. There are a number of books that you can read. I think I read a book about, you know, even if it's just about mindset, right? But in terms of technical books, I mean, I like the Buffett Way. It gave you some good principles in terms of how to spot value, because he's really a value investor. There's another book I read by Dr. Van Tharp, which is How to Trade Your Way to Financial Freedom. That's probably not a very popular one, and it's kind of thick, but it has some great nuggets in terms of how to actually approach the market. Because you have to be careful, you know, because some of these books, as I said, they're highly theoretical, and especially in our market, our local market, it doesn't always apply, right? So you have to more know about the psychology of the market. I tell some people that it's sometimes, to me, the market is more psychology, less finance, you know? It's more about understanding behaviors, because when you think about it, remember what we said, it's buyers and sellers in a venue trying to exchange, and it's supply and demand. So trying to know what the key drivers are of those really will help you get on top of the market. But at the base of it, you need to have a basic understanding of the fundamentals, how to read financial statements. So, you know, the last book I read on that was probably Accounting 101, right? And so, you know, I think in this day and age, there are so many courses you can do, right? I know you have a course. I know David puts out information. I would say be as widely read as possible. You know, the securities course is a good start as well if you want some basic knowledge.
That is true.
If you want some basic knowledge on how to read financial statements, that is certainly a way to go. There's a portfolio management course. I don't even know if it's still offered by the securities.
Rich Carlton one it's
Yeah. Rich. Those are courses I did, which was many moons ago. So
Well, I know at least the JSC one you mentioned is still offered by the JSC. I did it up to maybe 2018, I think I did it.
Right. So those are your beginners how to read financial statement courses, and what I like about them, they give you a practical approach, which sometimes when you read a book you can get lost in. So depending on the type of person you are, that's definitely a good place to start.
All right, now let's get maybe more practical, since you mentioned.
Can I mention what the books I'd have read? The first book I'd have read would have been the JSC's A Guide to the Jamaican Securities Market, and that's actually on the website for free.
Correct.
So that book, just very simple. It just says what is a stock, what is preference shares, what is bid/ask, the list of brokers. So, and I said you can check the book out. It's online, free. The JSC has physical copies, but that's very simple book you can check out. It isn't complex. It doesn't went to financial statements or so on, but it goes to the basics that you probably need in initial stages.
And it does answer a lot of those questions. Now, if somebody's just starting out, where can they go to check up on? So let's say they bought the stock already. Where can they go to check up on their stock?
Well, your brokerage account, your broker should be the first stop, right? Because they're the ones that actually hold your account. So we have Moneyline, where you can, of course, go on, see your portfolio, look at the market, look at some of the technicals, how stock prices are moving. That would be your first go-to, your brokerage account, right? You have the Jamaica Stock Exchange, which I know they did a recent redesign on their website. You'd go there to get your financial statements. Brokers also provide research reports, publications as well, that you can use to get information on your stocks. I also know you have a tool, right?
I do have
Money
to. I was
Day,
going to mention
right?
My Money Day is a wonderful
So
tool,
I know I've heard good reviews of that. That's there are different sources for you to go and access information. But you say a key thing: checking up on your stock is critical, right? Stocks are not something you buy and lock in a vault, and it's something that requires constant assessment, at least minimum on a quarterly basis, right? So you always need to be on top of what you have, what's going on with the company, to decide whether this is something you need to stay the road with or you need to divert.
And of course, you can do it on your own, I believe. But if you can't do it on your own, who do you recommend it as somebody would speak to?
Well, a financial advisor. Your licensed financial advisor is the source. I can't speak enough about educating yourself, though, because what I find is when persons go to an advisor from a place of information, I think they get much more value out of what is the discussion, right? We're in an environment now where there's a lot of selling, so you really need to know what you want, right? And insist and know what the person is selling to. Does it match with what you want? So an advisor is critical, but informing yourself, to me, is even more critical.
I get you. Now, again, for the more practical point, let's say I bought the stock. Life saves my 100 grand put on, and a little thing happened, I need 20 grand. Can I borrow against that stock that I bought?
Yes, the first thing I tell you is you should have an emergency fund, so you don't have to do that, right? But life happens, right? So the beauty of stocks, it's an asset. It is an asset, just like a house, just like a car, and most brokers will lend you against it. Some brokers provide margin, some brokers will provide just a loan. So like JMMB, we do a sure advance product, where we'll actually lend you against the value of your portfolio. I don't think it's one stock. If you had one stock, you might have a little bit of a problem. But, we still can, work things out to suit you and lend you against your assets.
I talked from Jamie the other day, and they were explaining about their margin product. They're saying, for main market stocks, can borrow up to 50%, borrow against up to 50% by your portfolio. So if you have $100,000, can borrow up to 50 grand.
Right.
They were saying that it's a good interest rate, under 8%, and
Yes.
that's up to 5 years to repay. And that's just one of the benefits of financial assets, in this case stocks. You have that benefit of borrowing against it if the case becomes be where you need an emergency, or you want to buy another stock but you don't want to sell your current position.
Yeah, loan rates are typically cheaper than margin rates. So
It's a secure loan.
and it's just like a regular loan. And you may even have certain flexibilities where you may be able to even get an interest only. So, depending on what your needs are, at JMMB we can assist you, look at the situation and make an offer, in terms of how you want to structure the loan.
All right. No, I seem to have like about 15 or so minutes left. I want to go a little rapid with the beginner questions, but still
Alright.
good questions. So we'll start off with the simple one, because we touched on it, but we never really said it. Main market and junior market, what's the difference? You can take that one, David.
All right. So the main market is, where companies go to raise at least $500 million worth of capital. meaning, money that they want to use to grow the business. While the junior market is a space for younger or growing companies that want to, benefit from the JSCs, or sign the JSC with the tax rate that comes with the junior market, the ability to raise capital, and, also to get that brand exposure. So when a company is on the junior market, they, in the first 5 years, they do have to pay any income tax for that period. So it's 100% tax free. For the following 5 years, they get a 50% remission on the regular tax rate. So in Jamaica, the tax rate is 25% for ordinary companies. So for the remaining 5 years, they pay at 12.5%. So the main market is where you see like your NCB, your JMMB, your Scotia, and the junior market is your Spirtree, your Access, your Last Gold companies, your Mailpack. So
I understand. So that the main market is where the companies that we grew up heard about are, and the new fire companies, they're more on the junior market.
yes,
This one for you, Greg, is a very popular term. What does the term blue chip mean?
Good question. That definition has actually changed over the years, because when I was introduced to the market, blue chip really meant companies that had a consistent track record of performance, meaning growth in profitability, growth in revenues, paying dividends. They were ranked. So like the select index was a top 15. At some point it may have changed to the most liquid, right? Which is necessarily
Yeah.
the most
Which means the ones that are traded the most.
that are traded the most.
Right.
So, but in my mind, blue chip really should speak to the underlying performance of the companies that are of the most consistent growth in terms of profitability, liquidity, paying dividends. Those to me are blue chip companies.
All right.
Can I tackle these two questions, Randy? These two questions that we discussed from the audience.
Well, I was about to ask that one because everybody know we're talking about buying the stocks, but then the real hot question that comes along after you bought is, how do you know when to sell? So you can tell that one, David.
So the first thing, what was the original goal? Because if it was the case for you, to meet a target of, say, 100%, we meet that target, and it's like you say, going up still, are you going to be greedy and say, I will take a little bit more till it goes up, or are you going to leave the casino and just go about your business? And that's a serious thing, because sometimes, circumstances change. So, back in this, call it October, November, December, there's some changes at Carib Cement, which was not likely by the market. For many persons, it was better for them to have exited the stock in that case, since the circumstances around the company had changed, although the goal that probably had to be met. So, it's, as Greg mentioned, it means a constant reevaluation of what's going on in the market. So, if you read the paper and you see some particular piece of news, that you can talk to your advisor, or, you can just go and say, compare it against the company's financials or what you actually is available in the public to understand, what's the difference. And, it really comes down to, what was the target. Because there are times when it's an emergency, you have to sell, and other times, where things just change, because if a company when COVID hit initially, right, people sold because it was a certainty, as companies went into straight losses, and as circumstances changed. And there are cases whereby you will see another investment which was going to perform better, so you just sell and you move the capital into that other stock to make more money. Because at the end of the day, you can hold it to infinitum, or you can move capital as needed, meaning your money from what stock A to stock B, and keep growing that money. So it really comes down to, what circumstances are in the background, your goals, and, what do you understand?
Okay. I like that. Greg, I don't know if you can just clear it up, because sometimes people might really be worried after hearing the technicals and they're like, boy, I don't know if this is for me. So as much as you're with JMMB, you can tell people, can somebody, a regular person, manage their own portfolio, their own stocks?
Yeah. I definitely think that once you are willing to put in the time, that's what it goes back to, right? Some persons, they see the stock market, they see the returns that other persons make, and they want that. But when it comes time to put the investment in, which is, educating yourself, spending the time to understand the market, if you don't find yourself in a position to commit, then certainly maybe look another route, or maybe look at a managed portfolio. But you can do it. There are so many investors. I know David has been successful. You have been successful. You guys started somewhere, right? And it took time.
Yes.
It took time. So, anybody can do it. It's not rocket science. It's not, it's not, it's not like physics and propulsion engineering and that sort of thing. But it does take some amount of discipline and commitment. So you have to look into yourself and decide if this is what I want, this is how I go about it. The avenues for the education are there, right?
Okay.
But you just have to decide if you're going to do it. If you don't, that's okay too. There are products out there that you can still get exposure to the market, and you can still make reasonable returns.
Okay.
So another question from the audience, about the JSE having index funds. So there's no direct index fund to the general combined market, but you have unit trusts which track sometimes in the market. That's a managed product offered by different brokers. JMMB, for example, offers them, and in this case, you have the Sagicor Select Fund to track the manufacturing and distribution index along with the financial index. And for persons as much as an index, it's just a metric that is used to track the market and from a perspective based on the companies and the valuation of the companies that make up that index. So, for example, the JSE index measures all the ordinary companies on the JSE. The financial index measures all the financial companies in the JSE, and the market for those companies influences the movement of the index.
Okay. Well, this one I don't know if we said it, but this one is a second poll question for you guys to win. So if you didn't win on the first one, this is an opportunity for you to win on the second one. And it's a nice, easy question. What is an IPO? So if you're in the Zoom, you should see that popping up on your screen, and you select the answer, and we will see what is an IPO. What does the term IPO mean? And I'm going to go back to you, David, while people answer that.
Sure.
Because I only have a few minutes left. So if you wanted to leave people with a message, what would you want them to know about the stock market?
The reality is we're going into an environment where things are, becoming more expensive. Chicken price is going up 10%, cement going up 8%, water bill going up, light bill going up. So the thing is that all of us are going to have opportunity to, build second skills, probably make a site or, find another job to, make up that income. So the stock market can be one vehicle for you to, build your income, be Jamaica, Trinidad, or US, for example. Look at it and just see what you can do. Because there are persons who, for example, the persons who bought, to say, some NCB or JMB years ago, and, they haven't looked at it, look at none, they're like, oh, this is pretty nice.
That's a very real.
No, that's a real examples because I've gone to annual journey to different companies and I see some older persons, some shares they have, and I'm like, oh my. Like, when I see that kind of wealth, it kind of wakes up to the reality that when persons were running from Jamaica, or, selling out to the market in the FinSec era, or even during the little bad times, people were stocking up and, reaping some serious rewards.
Yeah,
That's very
I
true.
met a lady last month, December, who said she worked, well, I won't say she worked, but she bought, while she was working, she bought some GK shares. Every time she worked, she's a public sector worker, she bought some GK shares. And so she's talking to me and she said, she's retired now. And she don't have a lot of money, but she have a couple GK shares, so she's wondering about them. So I told her what the GK price was and tried to multiply it by the amount of shares she had. She didn't know she was a millionaire until that, a multimillionaire until that point.
Does she get dividends though?
She has had them for years. She's an older lady. She's retired now. She's been buying them from she's young and working throughout the years. So it's a very, very, very real thing in terms of the wealth that can be built up from just really being in the market, even if you're not an expert. If you're just simply following the starter rules of buying what you know.
The tenets of what should be your guidelines or your principles.
Mm-hmm. I know from maybe a more experienced position, Greg, if you were leaving people with that message, what would you want to leave them with?
I would say start. If you have not started, start. As Randy has said, David, it's not hard, right? It's not this big technical scary thing that you may think it is. Just open your account, start basic, invest in some knowledge, and you'll be surprised what the results will be. I remember when I just started, you had persons that were buying shares. Like, I remember somebody was selling in like 1 million NCB at $7. Right? and the thing is, nobody really wanted to buy it, and somebody did buy it and parked it. You can imagine what that person is, right? Right. So there's you just have to start, get a good advisor, invest in the knowledge, and you'll be successful. You'll be surprised.
Can I have one more thing before we close off?
Yeah, man, you go ahead.
No, so like my mom, she had some NCD shares, so it's a delegator, she never look at investing like that. And she had a colleague, her colleague has been buying in shares every month, take with her paycheck, buy the shares, it doesn't matter the price, just keep buying, and she's like an 8-figure millionaire now, and that she says that stock is going to be a pension stock. So for persons, who do have that formal pension, their dividends are their pension, so
So you say your mother is an 8 filament.
no. She had some NCB shares and she sold them to Bill Gates. But one of her colleagues, she took a paycheck every month, just buy some shares, keep buying. The market is down. She's still an 8-figure millionaire. And the thing is, when the dividends have to go back in again, she can retire in peace.
Yeah.
Wow.
Even with inflation going at the current rates.
Yes, that is 100% true. And then for my part, I think I joined very good that message, which is to say that if you think it's complex, it is not as complex as you think. It does not require a heavy amount of money to start, so you really just want to start. If you can save, you can invest. In fact, saving is investing. But there are better ways than simply putting it down and hoping. So
Yes.
please, trust me, if there's one thing I can beg you to do is just start. Just start. You already know more than enough. If you can go shop and come back with the right amount of change and whatever you went to the shop for, you know enough to invest. So thank you very, very much to, of course,
Yes,
people
thank
watching
you.
and listening. Thank you, gentlemen, for joining in.
Thank you, Dave.
Thanks.
And I hope it has been really, really good for the people who have been paying attention.
Guys, I mean, we could be here all night, I think, having this conversation about investing in stocks. But I really love the fact that we took the time to level set and start from the ground up, because I think that that's really the only place we can start. We do have a little bit of extra time. I saw some folks raising their hands. Is it possible to get questions now, or do I just kind of continue? Because I had a couple of questions that I wanted to ask as well. I'm just looking at my multimedia team to see what's possible. All right, we see a question coming up. Could you put your questions in the chat, please? All right. Yeah, so put your questions in the chat. All right. But, there's one quick question that I had, guys, is the whole matter of, so we talk about stocks, we're encouraging people just to get started. I know for me, my biggest regret when I started investing in stocks was that I didn't start sooner. But there's a question that I have too about, is there anybody who investing in stocks is not right for? Because I feel like sometimes some people may think, well, investing in stocks is really just for those people who love to take on risk, because of the potential that you could lose out or lose big. Obviously, we know that's not necessarily the case, and we hear about alternatives like equity-based mutual funds, both here and abroad, which we're going to talk international stocks tomorrow, but let's keep it local. So do I do the index thing, or do I do the unit trust funds thing? Because, boy, I really just don't have the time to be monitoring what's going on, So would you say there's anybody, and I'll start with Randy and go down real quick, anybody who investing in stocks is not right for?
Honestly, me, I'm biased. No, I don't believe that. I believe that no matter what your investment profile is, there might be either the right stock or the right mix of stocks for you. So I think it is literally for everybody, and I stand by it that it is literally the only way to build wealth.
Okay.
So maybe maybe it's not the right one in, but stocks are for literally everybody.
Right, and this is Randy's view, guys, remember. I'm very cautious. But thanks for that. Greg, what about you? What are your thoughts?
Yeah, I think stocks are one of the most powerful vehicles for creating wealth. I mean, I would throw some real estate in there too.
Yeah,
But,
real estate is a good one.
it's more a matter of your allocation, because I do think as you get older and you really don't have that time or interest to follow up your portfolio, if you don't have a good manager, then maybe you need to reduce your exposure to stocks and put that into something a little bit more certain. Right? Especially if you're not well, maybe stocks are not the best way at that time, but everybody should have a minimum allocation towards stocks.
Stocks, yes.
When you're young, most of your money, I think, should be
In
in
stocks,
stock
yeah,
market.
for the younger investors, absolutely, absolutely. David, what are your thoughts? Although I think I know the answer. Go
Oh,
ahead.
same like Randy, that, really and truly, there are companies, or stocks that will not fit your profile depending on your stage or position in life. But at the same time, there is a stick for every bush. So there is something for everybody. And the thing is, it might be a mix of stocks, just like Greg mentioned, or, it might be one particular stock you would choose and just, keep investing in. But at the end of the day, stocks fit everybody because the reality is a lot of us, don't get benefit of it to say a trust fund or, something put down for us going forward. So if and the thing is, I mentioned earlier, a person when you retire, right now and the dividends are paying the bills. So you cannot ignore stocks and you should
Absolutely.
not say that it's with anybody. The reality is there are stocks that shouldn't be in your portfolio, depending on if you're quote unquote conservative. But
Right.
at the same time, don't discount it.
Right. And I think that's great. So I think we are pretty much on the same page that everybody can invest in stocks. The question is how much of your investment portfolio you should have in it. It is wise perhaps for the younger investors to have more of it than the not so young. Not a bad point at all. And even so, again, the types of stocks. And it's a good segue into one of the questions we got here in the chat. What are some criteria that you should use to consider when selecting companies to invest in on the stock exchange? So, there are tons of companies. What are some of the criteria? Let me just start with Greg and move left to right. Companies, when I see all these companies, how do I know which one I should be looking at to buy shares in?
Is the company making money? Is it
Is
growing?
it making
Right?
money?
That's the first thing. Is it
That would be a
if it's not growing its top line? I mean, even more so your top line revenue, right? Which is your basic core business. Are you making more money year over year? Are you making less money? How efficient are you? Are your profits growing? Those are the basic things that I would look at before I even start to delve into the intricacies of the company, right?
Yeah.
I mean, we talk a lot about things like price to earnings ratio, price to book, and all of those things. But for me, to start, is the company viable? Is the
Yeah.
business model working? Are the margins at a level that I have confidence that this will generate value to me as an
Indeed.
investor?
Indeed. And at the risk of sounding repetitive, Randy, is there anything you'd add? So, yeah, the company needs to be
Yeah.
making money and show that trend over time,
Yeah.
historically.
Well, what I'll actually touch back upon that Greg mentioned earlier, which is that yes, the company making money is very, very important. But remember, the stock market isn't just about now; it's also for the future. So it's key sometimes to find out, is the company making money, or is the company in a position where it's going to be making money? Because sometimes, in fact, very often, if you want to be good at the stock market, you want to get in before everybody else or before it's too popular. So the people who bought CPJ 6 months ago are a lot richer now because they got in before tourism recovered in the way that it did, and then everybody realized, right? So yes, is the company making money is a strong, strong point, but also understanding what's happening around the company helps you to know, is it going to make money soon? So that's an addition that I think is great there.
All right, thank you. I'm going to jump to David for a little bit. There's a question here. When you talk about the Jamaica Stock Exchange, and I think I may have touched on this earlier, do you recommend, based on your, not even so much recommend, but in your experience, David, how do you see those investing in the indexes versus indices, indices versus individual stocks? I mean, in your experience.
No, so okay. So I can touch on it earlier, but for to add again, currently, as I said, we don't have a direct index one like in the USA. Like you have the QQQ or you have the spider funds, which are tracking like a S&P 500 or a general index. We only have two general index funds, quote unquote, and a thing called index fund. They're called listed equity funds, which are the statutory select funds, one from financial, one from manufacturing distribution. And you have unit trusts, which some of them do tend to track the market based on how they're composed. But the reality is individual stocks do tend to perform better over time. But as I said, it all comes down. Are you able to actually put that kind of work in to analyze a company, or keep up to date with the financial of the company? Because as somebody says, you can diversify and quote unquote reduce risk, but see little returns, or you can put in your money into one or two stocks where you have to watch it like a hawk. And and a question earlier about selecting companies, there are three criteria I would say. The first one is, has management been through a war? And the reason why I say that is because Most companies have never gone through an experience like COVID. Some companies went through FinSac, survived then, but some companies haven't gone through that kind of detrimental environment where that really innovate to survive. So can management pick up under the stress? Are they ready to adapt and shift if things are going different direction? The next thing is cash flow. How did the company get their cash? Because the reality is, as much as you can show profits on your income statement, are you actually taking enough cash to actually run the business? Are you running the bank overdraft? Have your bank overdraft? Is that you're spending too much for that inventory? That actually matters because if the company is making the cash, how do you pay dividends? Because they're in the cash, they can't pay dividends, and that's just one example. And then the third thing, is just how the company is structured. So, are they heavily indebted? Or are they is asset light, meaning they don't need much assets to generate their money? So, those things really come into the criteria mix.
Yeah.
And as Randy said, the company's position might not change significantly sometimes, but in other times the market will say otherwise.
Thank you very much. And I keep going back to the point that we could be here all night talking about stocks. And I think this is one of our most anticipated sessions of Elevate 4.0. And I don't think we could have put together a better panel than what we have here this evening. Wonderful, wonderful stuff. And we're just so grateful to all three of you, first of all, for taking the time. You could be doing other things on a Saturday before curfew. But you've chosen to take the time to come and share your experiences, share your information, share your research, and we're just so very grateful. And of course, Randy Rowe, Greg Lindo, David Rose, thank you so much for everything and for everything you would have shared. And again, guys, we're no recommendations given here, no advice. It was really just an informational conversation about things you need to be considering as you start exploring the whole matter of investing in stocks. All right? So, guys, important point now. All my Twitter people, right? We are going to be continuing a part B to this discussion because, as I said, we could be here all night. At 9:15 tonight, we're going to be hopping over to Twitter and we're going to have a Twitter Spaces, right? Audio conversation. And we're going to be bringing to you David Rose is going to come back for that Twitter Spaces, and Clive, my friend from JMMB, is going to be joining that conversation as well. Everybody should know Clive. He's on Kalila a whole lot. So Clive and David are going to be live on Twitter Spaces, JMMB Group JA's Twitter Space. We're going to be hosting it 9:15 tonight. We're just going to hang around for maybe about half an hour or so. And please join us if you're a Twitter person. I know you like that. And we'll do our best to take as many questions as possible at that time as well. All right. So that's the end of our first session. We are gearing up for the second and final session for Saturday. How we loving it so far, people? I don't know. Una can drop it in the chat. Tell us what you're loving. We love to have you. We love to see the engagement. We see the comments. We love the feedback. We're trying to address things as they happen, audio issues and ting, you're working with technology. But we really appreciate the fact that you've joined us. Now, guys, you have to stay tuned for this session. And here is real talk. Real talk. Okay? Now, this session is not only going to have another awesome set of panelists and a fantastic moderator, if I do say so, and who's no stranger to anyone who is into the whole matter of money management, investing, saving, etc. But why we thought this is important, guys, and we've gotten the feedback on social media, is that we're really going into a new year of a lot of conversation about what's happening with the Jamaican economy. Right? Serious thing. Because we've heard talk coming out of the BOJ, interest rates going up, right? Or have already started, right? And I know a lot of people are concerned because the next thing is, well, if rates go up, inflation go liquid, what does that mean to my investment portfolio? What does that mean to my ability to save and invest in 2022 and beyond? A lot of people are concerned. And so, of course, JMMB Elevate, we're breaking it all the way down, keeping it all the way real. We believe it is important to have such a conversation. And guys, again, this is not for the bright people or the smart people people or the money people. This is for anybody who has a financial goal and really wants to get a very interesting and easy to understanding, yeah, of what is going to be happening in the economy in 2022. And so that's what this discussion is all about. We talk about, yes, high interest rates, this, that, what does that mean? How does that impact me? That's what we're going to be doing in this coming session, okay? Now, let me just finish up some housekeeping items while our second set of panelists are set up. Now, remember, we're still giving away prizes and surprises on social media. If you're not following us, follow us on Twitter, JMMB Group JA, or on Instagram, JMMB Group, Facebook, JMMB Group Jamaica, right? Make sure you're following us there. My Twitter people, how you can get a chance to win is we need you to be tweeting. You see all the nuggets that we're dropping before? I hope you've been dropping them. For the nuggets that we're going to be dropping in this coming session, please tweet them out there. We need the world to know. And of course, when you tweet, tag JMMB Group JA. Use the 3 hashtags, hashtag JMMB, hashtag JMMB Elevate, and hashtag JMMB Goal Getter. And the persons who have the tweets that have the most or the highest number of retweets, you get a chance to win one of our awesome prizes. If you're on Instagram and Facebook, then just head over to JMMB Group or JMMB Group Jamaica's Instagram and Facebook pages to see what you need to do to win on those platforms, right? So get in the fun, don't miss out. We've been giving away prizes and we continue to give away more. Of course, I have to thank our awesome sponsors without whom we could not do Elevate 4.0. First of all, Express Fitness, we are grateful to you as one of our sponsors. Domino's Pizza, we're giving away free pizza. We've started already. Thank you so much, Domino's Pizza. The folks over at Water and Cran Water, keeping everyone refreshed and hydrated. Live Simple Health, beauty products rather. I'm looking at their Instagram page in my line of sight. But they make gorgeous products that are great for you and the environment. And then, of course, our friends over at Brescia with their fantastic locally made products, including bags and masks. And we know masks is a thing. 3 years ago, we didn't think so. But hey, we are here in a new dispensation, and Brescia has stepped up to the plate with that. So thank you so much to our sponsors. We're very, very happy that you are on board with us, right? And remember, guys, look out for the survey that's going to be going out at the end of day 3. Ooh, we're in day 2. Day 3 tomorrow, when we're going to be inviting your feedback. More about that later. So there's been a lot of buzzing going on around me while I've been talking here for the last few minutes, and I see the room has settled again. So I'm going to assume that I can now introduce the panelists. Oh no! I forget, no, it's technology. So I am still in the room, they're in the room, but we're online, so we have to go into the other room, the other online room. You see this technology thing, I think I'm too old for it. So here what, we're going to catch you in the next room, so just hop on over and we'll see you there in a few.